You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to enjoy over here on the old network, including well over 100 archived episodes of Volatility Views. If you're just discovering the program for the first time, or maybe you're tuning back in after a while and you missed some episodes, go ahead and peruse through those archives. There's a lot of great guests in there, a lot of great discussions on a lot of great topics that are more than just, hey, what's trading today? We certainly talk about that as well, but of course, the discussions resonate past what's going on that day. And of course, the guests talk about a lot of different topics that are valuable and educational and informative a month, a week, a year, several years down the road. So check them out. It's interesting stuff. If you haven't had a chance to go through the archives, I encourage you to do so. And of course, that applies to all of our programs, but you're here for Vol Views, so we'll stick with that one for today. And of course, where can you find all of that great Vol Views content? Well, of course, the flagship, theoptionsinsider.com. Click on the Insider Radio Network tab, and you're pretty much done. Just click on Vol Views after that, and you could download and stream till your heart's content. You can also find it iTunes, TuneIn, Stitcher, AHA Mobile, pretty much anywhere you find your finer podcast programs. And of course, you can also get it all baked into our mobile app, available for iOS, Android, and indeed, all 10 of you who have the Kindle Fire tablets, or maybe even the Fire phone, you can get it for those as well. No shortage of ways for you guys to enjoy the content. And while you're enjoying it, or maybe after, you have a question, you have a comment, you have some insight you want to share with us and with your fellow listeners, go ahead and reach out to us. We love to hear from you guys. And joining me on the old program today, you know him, you love him as the host of our Options Oddities program, as well as his many different appearances on this program, and of course, the Option Block. He's the man about our network. He also spends a little bit of time over there at the old Option Pit, mentoring and educating some clients. So he's a very busy guy, but we're happy he can make it on the old program today. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, how are things in the hinterlands of Maine?
The hinterlands of Maine are good. It's hard to, after an intro like that, I don't quite know what to do anymore.
You've done enough shows now where you know when I throw crazy intros to you, how to respond, sir.
Normally I just go, or I don't have my mute button on, so I'm trying not to mess up your intro.
Speaking of a little bit different intros, if Mr. Andrew sounds a little bit different, because he actually had to come out of the wild. He had to come out of the hinterlands of Maine today and actually go to a place where there are people, a.k.a. a shopping mall and a Best Buy, because right before the show, he had a bit of a technological meltdown I'm familiar with those. We had a quite literal one here a few weeks ago where our main primary system for recording the show was quite literally caught on fire and melted down. So we're familiar with those. So he is making do on the mobile, which is why there'll be a little bit of background noise today. But you know what, listeners? It's worth it so we can hear the Rock Lobster himself. And we're glad he could make it. We're glad there indeed is a Best Buy to be found there in the hinterlands of Maine, because I know there's an LL Bean store. I know there's a myriad lobster shacks. But beyond that, the signs of technology and civilization are few and far between out there in the hinterland. So glad you could find that, Mr. Rock Lobster. And I'm glad you could join us, because now it's time for us to get rolling with the show and dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, that fun tune means it's time for the old volatility review. Like the man said, this is the portion of the show where we break down the week that was from a volatility trading and analysis and research and just breaking news department. We are recording this on Friday, August 14th, for all of you out there playing the home game. And as we are recording this show, kind of a bit of a bifurcated market out there today, but mostly pretty much unched. The S&P up a little bit on the day, up fractionally on the day. The NASDAQ pretty much unched. VIX cash moving to the downside, going into the weekend, and not a heck of a lot of activity. And the Dow up a little bit on the day as well, but certainly not the rocking and rolling days that we've seen earlier this week, this Friday, at least so far, about halfway into the session here. A little bit quieter than what we've seen on recent sessions, recent days. Andrew, it has been quite a rockin' and rollin' week, and we're not even into Rocktober yet, so I'm not sure what to make of it. But it has been interesting stuff. So what's your take on the week that was from a volatility trading and analysis perspective?
Did anybody notice that the Chinese devalued the yuan?
Wait, they did what? Hold on, let me go check on that. This is breaking news to me, sir.
Yeah, I did. I'm sorry, because the VIX is trading, what, close to the 12 handle? Doesn't anybody care about that?
Because it's Friday now. That was like Tuesday's news. That's old news. That's like 3 days old.
It's freaking me out. Like, what the heck is going on with all that, you know?
Well, apparently they adjusted the fix. They made it a little bit slightly stronger last night, overnight, up to like, I don't know, about 6.4 or so. So apparently that eased some of the concern. But yeah, you're right. This is Friday. That's old news in this cycle. It's got to be minute by minute.
I don't understand, though, why there's no volatility. It looked like we were going to get a little off to the races. And all I can think is that, okay, so it's nothing now. But for the Chinese to devalue the currency just out of left field, somebody's got to be worried over there. Kind of reminds me of, like, you ever see that movie Madagascar? Anybody have kids, you know, like Melman the giraffe? You know, we got to do something about this.
So a bunch of hypochondriac giraffes out there in the audience. Is that what you're saying?
Something like that. Like, at least I think the central bankers are starting to freak out, because I think all the little levers that they're used to pulling, you know, they're pulling them, but they're not getting any response. No response. So how about watching just the price of oil and commodities after maybe a small bounce, just going into the toilet? So from a volatility point of view, you know, VIX just doesn't care. And to be honest, people aren't buying premium until late August. I don't know if it's because everybody's on vacation in Maine, which is what it feels like, by the way, in Maine. There's actually people here, and no license plates are from Maine. So I think there's a big yawn about what's going on with respect to China. I think maybe it's just one too many times where somebody's cried wolf and then just nobody cares anymore.
It is kind of funny because we spent, you know, many months on the Ukrainian crisis. We spent several weeks to months on the whole tasty euro crisis. It was done, it wasn't done. Many 1% moves over the span of multiple weeks and indeed months as a result of that crisis. And now here we are with an arguably much more severe development than certainly the Greek crisis, and arguably the Ukrainian, because the shooting war has its own level of severity outside of the economic realm. But that aside, you would think this would have longer shelf life than, I mean, we reverted intra-session. We closed that day up. So it's amazing to see, how much, or I should say really, how little resonance this is having with the market beyond the initial, oh my God, the sky is falling. Oh, wait, maybe not as bad as we thought, despite the fact that so many of the major components of the indices like Apple and others are completely reliant on China for their future growth. And so you think this would have a little bit longer lasting impact than just a session and a half. You're right. Here we are going into the weekend, and they're clipping vol yet again. VIX cash trending to the downside. We're south of 13.5 as we're recording this right now, right around 13.40. The front month futures are on that level or so as well. So yeah, there's not a heck of a lot of urgency out there, not a heck of a lot of terror or fear or much of anything really going on today, which you're right. Given the global macroeconomic front right now, you think there'd be a little bit more hesitancy out there on this part. Has all this lit up any trades over there in the pit chat? Anyone diving into VIX as a result of perhaps a more lackluster move than expected?
The only thing that's been really kind of, I feel, reliable is, as soon as you're in the 12 handle in VIX in 2015, like buying time spreads or finding some small, relatively cheap vol trades have worked pretty well. It seems like the 12 handle is it. That's as low as we go. And then all of a sudden, we sell off from highs. You go from 2010, 2100 SPX down to 2050 or 2060. And we kind of stop there, but it's enough to make the vol go back to 14 or 15. And, that's kind of what we got. It is they're vol trades. It's vol trading in a range, and there's it seems like we just can't break out of it. And until we break out of it, I guess that's when we will. But for right now, from a VIX perspective, 12 seems to be kind of the hard top. I want to start singing the theme to Top Gun here in a second, but that's kind of like the hard top. You're not going through 12, even when we're in the dog days of summer. Although we've had a currency crisis or a currency devaluation, and potentially one of the countries are leaving the Eurozone, but ultimately all of this just comes to naught. It all somehow gets fixed.
It is kind of surprising how it all just kind of works out in the wash at the end there, Mr. Rock Lobster. We'll get more into the VIX beast in a little bit, but we'll start as you're want to here. We are still in the tail end of earnings season. I mean, there's still names coming out for a while, but a lot of the big names have already reported, but there still is some action, some volatility in the single names. You were talking about some surprising developments. When are people going to panic? I mentioned earlier names like Apple that are feeling the Chinese currency issue a little bit more starkly, perhaps, than others. And there's been a lot of talk. I mean, you could spend just pretty much all day, every day, going to the large financial outlets to read the latest swath of bearish opinions, outlook analysis, critiques, etc. On Apple as a result of this development. But there has been some interesting stuff on the volatility front as well. We chatted about a little bit on the option block yesterday, but looking at just what the options are pricing in over there from a skew perspective coming out of Apple these days. Our friends over there at Bloomberg did an interesting analysis, looked at the skew in recent history, and also looking at just the overall put volume they've been seeing out there in Apple, and both of them are pretty much flirting with or at record levels. I should mention right now as we're recording, Apple hovering right around that 115 level, seems kind of have been locked around there for the last few sessions. So at least in the near term, the aggressive sell-off may have staved itself somewhat, but the options are predicting a further move to the downside, looking at a 10% out of the money puts versus the old 10% out of the money calls. About a little over 5 vol point premium to those puts these days. That is indeed the widest spread since back in 2011, November of 2011. So coming up on 4 years here. And anyone who's traded Apple, not so much this past year, but in recent years, knows that Apple has always been and was one of the more reliable names to actually have some sort of premium to the call skew. Not many equity names really exhibit that. We all know it just covered call writing all day, which just crushes the skew out there. And yet Apple is one of the few names, certainly around volatile periods like earnings and others, where you could reliably leg into verticals for attractive levels. You could reliably write covered calls for more attractive levels than other names because of just the diehard zealotry of the Apple fan base would always imply a premium to those calls. It seems like, at least for the foreseeable future, that premium is nowhere to be found. Also, looking at the downside, one of the reasons those puts are so expensive, they're averaging over 600,000, actually 618,000 puts daily since July 30th. Looking back, that's the highest 10-day Apple put volume on record. You know, we kind of joked about this a little bit yesterday on the option block, Andrew, but it does kind of perhaps signal a bit of an end of an era. You know, that Apple was always that reliable. You can name a couple of names off the top of your head if you were looking for reliable call premium. You know, Facebook was one of them for a while. Tesla still is off and on again these days. A lot of these ones that have a more zealous fan base, and Apple was certainly the prime example of that for a long time. And now it seems perhaps those days are behind us. What do you make of this, perhaps the end of an era, the end of that call premium to the skew out there in Apple?
I think now the premium's going to the put side because there's that Apple growth. You know, they already taken all their money and they're buying stock with it. They're paying a dividend. And, you know, until Tim Cook invents something new, I'm sorry, it's a utility. It's a great utility. It's a utility that has some growth, but they're repricing it like a utility again. And when you do that, they're going to just pound those calls. And they've had 2 earnings where they've actually reported, you know, pretty solid, I would say overall pretty solid earnings, except the iPad's not growing anymore. And, you know, they've got a lot of growth in their phones still, but it's still not growing at a level where it's still going to generate them tons of money, but, you know, where's the next 10 years coming from? And ultimately, you know the stock market, they're not looking at this week. They're looking, okay, fine, they're making us a lot of money next week, but are we going to be growing for the next 5 or 10 years? And it's hard to make that case for Apple anymore. And without that case for Apple, there's no upside skew. Just to give you like a sample, I remember you used to be able to do 100-point butterfly in Apple back before it split for like $1.
Ah, the good old days.
You know, like a 600, 700, 800. 6 months out, there was so much curve on the upside. That doesn't exist anymore. So, and I think people now, the puts are expensive because all of a sudden they're like, wait a minute, I got a big capital gain and now I got to start protecting my stock. And the 50% realized vol this week probably didn't help either. You know, Apple hasn't been that volatile in like 3 years, I think. So it got quite messy there really fast because the growth story is coming from China. And without it, you know, we're talking flat revenue for Apple. And that's not what they're looking for.
No, not boom times at all for Apple. Apple, of course, being a big component of the S&P. So we'll move back now to the realm of S&P implied vol, a.k.a. the old fair gauge, a.k.a. the VIX. Like I said, we're hovering in about the 13.5 or so handle in the VIX cash right now. As we are recording this, the weekend is settling in, and people apparently not afraid to sell some vol going into it. So nothing else is really happening on the global macro scene that may make you perhaps be reticent to do that. Speaking of what's cooking out there in the vol land, we just had our second actual settlement of the VIX weekly futures, Mr. Rock Lobster. The first one going off on the 5th there for about 12.16. This week coming off on the 12th for about 15.5 or so. You know, VIX settlement, kind of always a contentious thing. It seems like so far I haven't seen as many people up in arms about the VIX weekly settlement. Of course, you could certainly, if you got settled at that 15.5 level, now we're at 13.5, you can maybe you're not too enthused about that. But in general, maybe this is just the kind of the changing nature of the beast. Now that we're confronted with these weekly products, this is going to be a weekly occurrence. It's just going to perhaps filter out some of the outrage out of the market, because usually VIX settlement every month was a reliable point of outrage. And it seems like maybe the fact that it's happening every week, it's beating some of the outrage out of people. Maybe people know that they have yet another week to get it right next week, so perhaps it's not as offensive to them. But what's your take on these settlements so far? And you think the VIX weekly future is shaping up interestingly? You think these are garbage settlements? Or maybe I'm putting words in your mouth. Perhaps you are deeply outraged. Are you outraged, sir?
I could be outraged, and I could take umbrage.
Did you take some umbrage at these settlements?
I was thinking the problem with weekly settlement is you get weekly VIX, and on Wednesday I thought the sky, wasn't the sky falling? The yuan was falling and things were messy and nasty. So you've got a weekly settlement and you're hosed on the morning of the 15th. You wake up and everything's falling apart. I mean, one of the things that the SIBO has accomplished fairly well with the VIX is the smoothness, because they're always 30 days looking 30 days out. And now you have weekly settlement. You go to bed on a 13 and you wake up on a 15 and you're totally hosed. And that, I think that will make it a lot more interesting as far as, near-term plays and things like that in there. You'll be able to do more interesting things. I think once there's a heavier open interest too, I think we might see, things might move a little bit, but it is the nature of the beast. But a 1 week product, like a true 1 week product, is going to cause a lot more volatility, no pun intended, when we're talking about the VIX. But that's what we're going to get. It is going to get much more messy, I think, as soon as the Fed does their first rate hike, although I think that's a big part of the problem why we're not able to really get more falls, because the Fed is kind of letting there seems to be more uncertainty about where the rates are going to go, all while there's a lot of consensus. The Fed could still say, okay, 25 basis points now and 25 basis points later. Who knows, right? And that will start to freak people out, because we've been rallying under basically interest rate certainty. And all of a sudden now that ain't going to happen anymore. We're back to, uncertain times. So we'll see how that goes. But as far as the weeklies go, I'm not ready to be outraged yet, although I have a feeling there's going to be some real sticky settlements because of just the nature of what VIX can do very short term.
I know you always have capacity for umbrage, sir. So I'm sure down the road there will be some umbrage at one of these settlements, and we will suitably enjoy it here on the program. But it's going back to what you just said, though. It's kind of interesting. It sounds like, are you perhaps one of these people who's being lulled now into the camp, given the Chinese impact and everything else? Are you starting to hear more of a drumbeat that the Fed is going to actually do something this year? It seemed just a month ago or so, even a few weeks ago, it seemed pretty much like a done deal that they weren't going to act, certainly before December. Even, the December Fed funds were pricing in pretty much a very low probability of a raise this year. It's starting to change a little bit out there, a little bit more sentiment. Are you starting to be lured to the dark side? You think the Fed's actually going to move here in 2015?
I am. I hate to disagree with Sebastian. I was
going to say that you're parting ways from a long-held position of your cohort compatriot nemesis over there.
I know. I think it's basically, think about it this way: we need one central banker to have some cojones, and I think what it's going to happen, it will be the only female central banker that will end up having the cojones to start raising rates, and that will be Janet Yellen. She will put her stamp on some credibility for the dollar, and I think she'll make it happen, because the first thing is 25 basis points isn't that much. Everybody's kind of expecting it anyway. And one central banker has to stop doing the beggar thy neighbor thing with continuing to lower rates, because it's clear it hasn't done a whole lot to really make growth jump. Commodity prices are in the bottom of as Mark would say, in the toilet. They're not coming out anytime soon. So at this point, do the fact that rates might go up a little bit, is that really going to change things a whole lot? So, but somebody's got to start the tide going at some point, because now you've got the Chinese are following, with the Japanese have kind of been at it, and Europe still has to deal with with the ton of debt they have relative as well. So somebody somewhere has to take the first step. And I have a feeling these central bankers, it's nothing illegal for them to have a cabal, right? So they can all get together and they can do a central bank dance, positive interest rates again. Because at some point, I always thought money costs money.
All right, moving on from the land of the Fed, because we have chatted about that quite a bit. We'll see how that plays out. A lot of opinions on both sides of the fence, but we'll move back into VIX options land again, because it was a very interesting week. As you might imagine, a very active week from a VIX options perspective. I know the options are where the lion's share of you guys out there, the listeners, participate on a product like this, and it certainly seemed like a lot of you were coming to play this week. We saw many strong days, several over 1 million, 1.6 million contracts going up on Monday the 10th. We had 1.4 million on Wednesday the 12th, again, that day of the 15.5 or so settlement range for the weekly VIX futures, and just shy of 1,835,000 on Thursday the 13th. And as we're recording this today here on Friday, seems like a decently robust volume day, about 550,000 so far, about halfway through the session. So closing in on that ADV of a little bit over 600,000. So yeah, so far this week there were 3 days over with multiples of the ADV, including over 2 on the 12th and 2.5 times of the ADV on Monday the 10th. Speaking of Monday, you may be wondering, why was the volume so strong on that Monday, 1.6 million contracts? Well, if you've been paying attention to the show, been paying attention to VIX options volume for the last couple of months, then you can probably guess that our old 1x2 friend came back. You remember last month he rolled out of the AUG into selling the SEP 1622 1x2. He did the whole thing net for over 1 million contracts, I believe 1.1 million, somewhere in that range. Well, he's back now, and he came back to roll the SEP to October. So he bought back the SEP 1622 1x2, and then he sold out. The rolling the strikes down a little bit, not surprisingly. We're a wee bit lower than we were last time he came out to play. He sold the AAPL 1521 a 1x2, again, to net close to or around a net million contracts on that trade. One of the reasons why that day was so 2.5 times ADV. And we've joked on the show before, but it's only really half of a joke that hopefully our SIBO friends have taken care of this fellow, because he is almost single-handedly driving the volume for this product. And a lot of interesting stuff out there, but that was certainly, for our VIX options trade of the week, it's certainly, you can't really go do much better than our old 1x2 friend. Whenever he comes to play, he pretty much dominates the rest of the week. Of course, it was an active volume week, as we said earlier, with the Chinese currency driving a lot of activity out there. But 1 million contracts in a 1x2 swap, that's going to take the cake. Speaking of taking the cake, looking out to where the rest of the people were playing out there, what the hot strikes are these days out there in VIX land. October starting to lead the charge, coming on the scene strong here with the AAPL 21s. Surprise, surprise, as a result of our friend out there in the 1x2 land. The AAPL 21s leading the charge with about 424,000 contracts open on that strike. Then we drop off about 100,000 to the AUG 18s, about 317,000 open. The AUG 20s with 294,000. And then we drop down yet again to the number 4 spot, the SEP 20s with 250, about 250,000 contracts open on that strike. Then down to the number 5 spot, the AAPL 15s for 224,000. Again, the other side of our 1x2 friend, so he pretty much accounts for 2 of the top 10 strikes single-handedly. This fellow, number 6, the AUG 23s with 214,000 contracts. And then we wind up all the bottom half of the top 10 here, pretty close. The AUG 16s, 25s, and 22s with 207, 205, and 202,000 open respectively. And we winded up yet again, the puts managing to eke out a respectable showing in the number 10 slot with the AUG 12 half puts. Remember that big put trader from a few weeks ago with 196,000 contracts open on that strike. Total of just a hair under 9 million contracts open, so pretty robust open interest as a result, no doubt, of somewhat at least of our friend there. About 6.6 million open on the calls, 2.3 million on the puts. Talking about calls and puts, we mentioned earlier, a lot of you guys like to write in about these Bloomberg articles. That's why I bring them up so much. But Bloomberg was talking earlier about the skew. They're going skew heavy over there for some reason, talking about the skew in Apple. Got a bit of a reverse story in the VIX options. Actually, it's kind of interesting timing. You remember on last show we were talking about, it seemed like there was suddenly starting to become less of an appetite for the upside out there. People were actually willing to actually sell some calls, and it didn't seem like we were seeing a replay of what we saw in July, which was pretty much buy all the upside in VIX you could and then watch it expire worthless. That's not exactly a fun game to play if you've ever played it. It seemed like that reluctance had come into the market in August. Well, not so much now going forward, no doubt as a result of our friends over there in China suddenly sparking a bit of an appetite for VIX calls. In fact, like I said earlier, our friends over there at Bloomberg doing yet another skew analysis, this time looking at the 10% out of the money calls and puts out there in VIX land, and the calls looking about 19 vol points higher than the puts. VIX always call heavy. VIX always getting a premium to the calls, unlike most of the other indices and equity names out there. But this is at another level. It's the most expensive since 2006. And one thing you can always rely on Bloomberg for is their data. They have good quality data. So that's a pretty expensive skew. Indeed, of course, that's also the widest spread they've seen since July of 2006. Of course, back in that time frame, if you want to look back historically to the last time we saw a skew shaping up like this in the VIX, the S&P jumped 25% right before it hit its peak there in 2007. So again, a lot of you like to ask about these articles. That's why we make sure we include these in these. Mr. Rock Lobster, this is kind of a bit of the opposite story of what we saw out there in Apple land with a huge premium to the puts. This time, of course, seeing a huge premium to the call side in VIX. Again, analogous to the put interest because they kind of both symbolize the same thing, but still. Interesting stuff, kind of hitting record territory in both names. What's your take here on this sudden renewal of interest in upside here in VIX land?
Ultimately, I think people are looking for that bounce, right? They're looking for the bounce they're not going to get. And at some point we will. But for right now, they're just not getting it. And I don't really know when it's going to happen. So this is the classic. Look at just the cash, like the SPX index itself. And a good 10% of that is what? Oil and gas, right? Some of those stocks are down 20 to 50%. And the SPX is within what? 10, 12, 13 points of all-time highs. So you look at that, and I think there is a rush for this juice and a rush for the upside because of the potential that we bounce. That we will get some kind of sustained move when we come off this, whenever the great rally, the Fed-induced rally ends.
Yeah, whenever that might be. I can certainly see why these almost conflicting types of indicators could be confusing to people who are not well versed in the volatility landscape. Because on the one hand, we're seeing a very broad drumbeat in the general financial media likes to pick up on things like just the VIX cash and run with it and saying, oh, VIX cash is trending lower after it hit its peak, and they give percentage moves of the VIX cash, et cetera, et cetera. And on the one hand, people who just listen to that might come away thinking, oh, there's not a lot of concern. We were just kind of actually referring to at the top of the show, actually, that perhaps not as much juice out there as you might expect given all the other developments. So they might come away from that thinking, oh, of course, things are kind of tranquil. Then they look at this actual data, they dig into the actual trading data, and they see there's actually quite a bit of concern out there. So I could see how people, and we get this email a lot as well, people are always confused by almost the kind of the conflating signals coming out of the VIX, and that certainly is the case. That's why we always encourage you guys to dig a little deeper into these numbers. That's why we do it here on the program. Speaking of digging deeper, all you guys always writing in saying, hey, look beyond just VIX. So we like to do just that, looking at one of the only other really reliable number twos out there in the volatility landscape. Not talking about, of course, like VXX and the popular VIX-related ETPs, but non-VIX-related volatility products. You got to look pretty far afield to get to the number two, and that is, of course, VSTOXX. And they're, again, looking pretty decent out there from a volume perspective. Similar numbers to what we saw last week on the futures side, with about 23,000, almost 24,000 contracts going up yesterday on Thursday, and about a little over 200,000 contracts open net. Again, that's the futures. The options, not so much. We're still, I think, a lot of people, Eurex included, are waiting and hoping that the Greek crisis really triggered a renewal, a resurgence of interest in VIX alternatives, particularly ones that are targeted at the Eurozone. And so hopefully that will translate into more volume out there. But we are keeping an eye on VSTOXX. We know as it increases a little bit, as it starts to become a little bit more attractive for you guys out there who like to spread multiple products against each other, as the markets tighten up a little bit, it'll start to hopefully attract more volume to this product, and we can actually start having a lot more credible conversations about about VSTOXX going forward. Mr. Rock Lobster, what's your take here on VSTOXX, as well as what I was talking about earlier, kind of the conflicting signals coming out of VIX?
Well, when you think about it, look at the realized vol overall, right? Our numbers are what, 12, or 13 and a half. VSTOXX futures are in the 20s, right? So it seems like there's two different markets going on.
Yeah, a little bit.
And ultimately I want to channel Don Schlesinger, so I know he listens to the show. So if I don't get this right, he's going to pound on me. But, where's the realized volatility? It's not in the U.S. per se. It's still in Europe, where markets over there, like the gap up at 1%, 1.3%, down 1.3% on pretty much, whatever snippet of news that you can think of. So if you're trying to arb the two markets and you're buying, let's say, VIX futures and you're selling VSTOXX, there might be something there with that kind of a trade. Maybe buy a call in one and buy a put in another one, or sell a call spread. That could be something. I don't know if they will ever, or how long it will take them for the realized vols to kind of come together. But clearly there's no real harmony in those two markets. I think Europe is still pretty volatile, and it ain't going away anytime soon, it looks like.
Yeah, you're right. A quick glance at the term structure out here at the VSTOXX futures, and pretty much everything from AUG front month now all the way out to March of next year. They're all in the 20 handle or higher, with the brief exception of DEES for some reason, right around 19.5. It's the only one south of 20. And then when you get up in the nearer term of the curve, of course, where things get a little funky, you're hovering around 22. And then out to March of next year, hovering close to 21. So you're right. Still a lot more appreciable implied vol out there in the Eurozone. Of course, we still have news coming out of that range. We had the Greek vote on the third bailout just recently. So there still is news coming out of that neck of the woods that could lead to a little bit higher vol. But yeah, things a little bit perhaps more robust from a vol perspective out there than they are here domestically stateside. So if you're looking for some action, for some implied vol, or perhaps you want to go to the realized space, in which case you should have been in Apple over the past few days. That thing was rocking and rolling. We'll see, of course, if that continues. And we'll also keep an eye on the VSTOXX, because we like to check in on products that start with V, that are vol-related but don't end in X. All right. Speaking of other products and other areas, you guys always like it when we go a little bit farther afield to the commodity spectrum. And as Andrew alluded to on the top of the show here, there was that brief flicker, that brief flirtation with a rally out there in the commodities, but it was short-lived. It got its legs cut out from itself again. WTI was hovering around, I believe, 41.5 or so earlier in the session. We're seeing Brent doing similar stuff. Looking out there in the vol products land, OBX, which is of course the USO derivative, about 43.25. OIV, which comes out of the actual big futures options, about 44.5. half. That's the biggest divergence we've seen in those two in a while. For a while there, they were moving in lockstep and actually were almost identical from a point value perspective. So a bit of an interesting thing to see out there. Looking at the term structure in WTI, it is kind of what we've seen for a while now out there, where the near portion of the curve is just wild in terms of premium to the puts and actually premium to the calls. There's premium to be had on both sides of the fence. And as you get a little bit farther out, certainly into the end of this year, into next year, becomes a much more rational. Still some premium to the put side, but we actually are starting to see some people loading up some bullish sentiment, some bullish interest out there in the farther portion of the upside call curve. So it's not all bulls all day long. And of course, at the end of the day, if we kind of just keep this kind of weird vacillation / slow downside move, it may end up squeezing out a lot of this vol that's in this product right now. Either way, Mr. Rock Lobster, it certainly still doesn't look good for that very much ballyhooed prediction that came out of Goldman that people had to run out right now and buy vol. And I believe it was downside put vol in WTI because these products were just underpriced from a vol perspective.
Not quite. I think usually in my head, you have a volatility when the upside and the downside are in play. And when you only have, kind of just the downside, there's not a whole lot of volatility because everybody's saying, okay, we're going straight down. We're just going to go down, 10 cents per day. And that's the kind of market that I've always characterized as a bear market, just one with no liquidity and no movement. It's kind of dead and shrinking. And I think, put spreads in oil or butterflies or anything like that, where, you're kind of betting on it's just a slow roll lower. And you could probably finance those by selling put spreads or something like that in like individual drillers and stuff like that, where the vol's still really high actually. In a lot of those names, and they're trading at, a lot of them are trading in the teens when they used to be like $50-$60. So there is besides, I think at some point we'll start to see some takeovers and that might generate some upside volatility again, but it's not going to generate upside volatility in oil itself. I mean, it's just until the Saudis or OPEC starts cutting back production. I think this Iran deal did what everybody thought it would. And if it really passes and they start exporting, what's going to happen to the price of oil? It's not going to be very good.
Well, speaking of commodities that haven't looked too great of late, got to shift our attention to the shiny metals, gold. Mr. Rock Lobster, you may have missed it. We touched on the last episode. I kind of hinted at it, teased it, but it's actually out now. We did a great episode of our long and short of futures options program, the show we do over there at the CME, and we talked to one of their senior economists who issued, Andrew, probably one of the more well-timed reports I've seen of this type, where he pretty much predicted, looking at the implied volatility of gold options and saying, it's on the lower end of the trough. Looks like something is afoot here, and he actually called it the gold storm on the horizon. That came out, I believe, mid-July, so 15th or so, and within a week, he was proved to be quite prescient as the underlying really took off to the downside, and that vol took off to the upside. Within a week, I believe implied vol had jumped up, gapped up six or even seven handles out there. So it was a very, very well-timed report. And he gets into a lot of great data about support levels. We analyze, what's going on out there in the implied volatility skew to see where people are hedging positions, talking about the net cost of producing gold and how that shapes into the hedging scenarios that are out there. So really fascinating conversations. If you haven't had a chance to check it out, it is live now on the network, listeners. You can find it in the main radio network feed, which is where I know a lot of you guys listen to our shows, or of course you can subscribe to the long and short of futures options feed as well and get it there, or of course just click on the LSFO overlay there on the radio network tab on our website. You could find it there. Pretty fascinating stuff, Mr. Rock Lobster. We don't really see people with reports that are so well timed. And of course, gold has rebounded a bit in recent sessions, is hovering right around in the of course, GLD, the one you guys like to trade a lot, I know 106 range or so, and a little bit higher than the low levels it's been hitting of late, but still interesting stuff at work out there in the gold realm. Have you guys been looking at the shiny metal at all over there in the pit chat, Mr. Rock Lobster? Are you guys pretty much fixated on the Texas tea these days?
We had a gold position that was kind of a ratio time spread earlier that was pretty much all the way off at this point. The next thing we had kind of a little thing going on in the miners. And it looked like we were kind of ripping on Wednesday as the yuan thing, as the devaluation kind of took hold. And then all of a sudden, it just as quickly as it came, it went, which what I thought, it surprised me because I thought we'd see a little bit more out of it, but we haven't. And ever since then, actually, the miners have sold off. I mean, that looked like some of our smarter guys had a long miner short gold position that I thought that has worked very well. So kind of little arbs like that we were looking at. Nothing fantastic, but as of right now, the volatility in the miners and they were all pretty high, and they're at levels that are looking for gold to go much lower. So at least right now, it looks like the miners seem to be leading gold lower, thinking that the future is not too bright for all the gold bugs. It's the sad but true fact of it's almost like the disinflation or the deflation story kind of quietly has been sort of picking up some steam here as the central bankers really have kind of run out of tools, so to speak, which is why I think they got to change it up. They're going to change it up and try something different at this point. So we'll see how that all goes. But from a vol point of view, there is a little bit of curve in gold to the downside, and surprisingly, not a whole lot anymore. Not what we're used to anyway. In there on the upside, I mean, I remember seeing a lot more curve than we have right now, and I mean, it's still there. It's not gone by any stretch of the imagination, but the gold bugs just don't seem to want it as much as they used to.
That's pretty much the case. I mentioned this on the show last week, Andrew, but I was talking to this economist, and he said when he had the temerity to issue a research report that might imply that gold might have some downside in the near future. He said he's never gotten more angry email in his life. He said the gold bugs, they are a very active cohort out there, and they don't give up their love of the shiny metal very easily. And they were accusing him of all sorts of horrible things, market manipulation and things like that, just because he wrote a research report. If you come out against gold in any way, shape, or form, you better have your facts straight, and you better be ready to suffer some slings and arrows because they are heading your way. And speaking of heading your way, we're pretty much heading up to the end of the show here. We're coming up against it. We've been chatting for quite some time, but before we go, of course, we got to dive on into our prediction segment. This is where, of course, we can try to embarrass Andrew as much as we possibly can. So without further ado, let's dive right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the Crystal Ball segment. This is indeed the portion of the show where we prognosticate recklessly and wildly and sometimes just outrageously on the future of what the volatility gods hold in store for us as the show has progressed. The mild sell-off in vol has continued as the market has turned pretty much across the board green now, mildly to the upside, but still enough to continue the weight on the old VIX, with the VIX cash now at 13 1/4, though, so well south of the 13.5 range where it was when we started the show. So again, continuing the conversation, no one really wants much vol, and again, looking at the realized vol argument, perhaps can't really blame them too much, as we are, of course, this is the part of the show where we like to look a little bit silly as we look into the future, see what the vol gods hold in store. Mr. Rock Lobster, an interesting time to be predicting. No one who could have predicted the Chinese currency devaluation a week ago at this time. So there is a lot of potential wild cards in the future. Everyone's going back and forth about the Fed. So there's a lot that could happen between now and next week's episode. But still, we like to dive boldly onto the breach, heedless of the danger that may be involved. So, sir, where do you fall? You think we're going to be hovering around this level next week? You thinking maybe flirting south of that 12 handle, a little bit higher? Where's your gut telling you we're headed?
Well, we will go to where we always go, which is like 12 and a half. And from there, volatility will bounce.
It does seem like it plays out that way a lot. We and I have joked recently on this show that we thought we would flirt, about a month or so back. We thought we would flirt with the 9 handle and maybe briefly there in single digits in the VIX land again. We flirted getting close to that level, got into the 11 range, and then we kind of never looked back. Something always seemed to conspire against us in the marketplace to drive us back into the mid to low teens. And you're right, it does seem like there is, for a variety of reasons, some sort of floor there around the 12 to 12.5 range where we can go this far and no farther out there. So, yeah, perhaps I would not be surprised to see us, maybe hit that level and then bounce again next week and come off it again. And again, looking back at the 30-day realize we've been seeing out there in the S&P, it's got a little bit of juice to it. It's hovering right around an 11 or so, again, inflated by recent activity. But looking at that number, then perhaps 12 is about where we're going to be, is about a realistic downside for the near future for volatility right now. So not an extreme prediction, but certainly not an unrealistic one either. Good. One more time. All right, and that's going to do it for the crystal ball segment. That's also going to do it for this episode of Volatility Views. But before we go, as always, let me check back in with my cohort here, my volatility compatriot / nemesis of the Rock Lobster, to see what's cooking in the land of the pit until the next time we can all gather here together around the old Volatility Views panel. Mr. Rock Lobster, take it away, sir. The floor is yours.
We have a event next Saturday where we're going to be talking condors and butterflies, how to put them on, take them off, manage, and what makes a good one and what makes an awful one. So hopefully, I think people have a lot of questions along those lines, and hopefully we will answer them for you. It will be Mark and I. It's about 3.5 hours. Check out the Option Pit blog. You can get a sense and a flavor of what we do, and you can sign up for the event on our event section on our website. Just go to optionpit.com/events, and we will be more than happy to talk to you.
Surf on over there, listeners, and get yourself some good iron condor love. Not the iron flies. They're too scared to go the iron fly route. But go the iron condor, which we know is an iron butterfly for cowards. But that's a conversation for another day, because unfortunately that's all the time we have for this episode of Volatility Views. And on behalf of the Rock Lobster and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending in such great questions. We'll get to those next week, and we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.